Come back inside of my channel. In case you just come to my channel for the first time, you want to smash that subscribe button, drop a like, and don't forget to turn on the notification bell so you don't stay outdated when I drop awesome content like this. So in today's video, I just want to talk about right strategy to use, the right mindset to approach the market. All right, so I'm going to talking about the top-down analysis, how powerful the top-down analysis is, how you can use it to change your trading decisions. All right, the top-down analysis is just you analyzing from the higher time frame, from the monthly to weekly, daily, and coming to 4 hours, 1 hour, take your entry. So that's just what is called top-down analysis. So from the top to the down, that's why it's called the top-down analysis. And top-down analysis is is one of the best way you want to be approaching the market. It's one of the best strategies you want to, because it's going to give you the overall direction of the market, whether the market is moving south or is moving north. So it's going to give you the direction and the flow of the market. So that's one advantage of using the top-down analysis. And one of the advantages of top-down analysis is it also helps you to identify key levels, where key levels are. Whether you can be in a trade. Let's say you are trading on a 15-minute time frame, and maybe you are in a sell trade and you're selling and you are in profit a little bit. All of a sudden, you see that the market reversed and hit you out. Sometimes it's because maybe you are selling to a support level on the weekly time frame or the monthly time frame, which when market get there is going to cause market to react. So that's why most traders still lose. So I'll be teaching you how to use the top-down analysis, how to mark your key levels on the monthly, coming to the daily, how to identify the direction of the market. One of the key tools of trading is identifying the direction of the market. Identify the direction of the market, you're going to be recording more wins than your loss. And one of the key ways to also become a profitable trader is you have to have a better risk to reward. And the top-down analysis is going to give you that, because you have seen the direction of the market, you know where the market is moving to. From the weekly time frame, you've analyzed it, you've seen it, and you just come to the 1 hour time frame to take your entry. So you are going to have a long target and a very small stop loss. So you're going to use the stop loss for 1 hour entry, but your target is you approaching the weekly levels, the monthly levels. All right. So without wasting much of time, so let's drive into the video. Let's go. So here I'm going to be using as example for this explaining this strategy is I'm just going to choose a random pair to explain how to draw your key levels. It works for any pair or anything. So you can see, like, for example, if you can see this is AUD card chart, and you can see this market is in an uptrend. But if this is 1 hour time frame, if I'm just staying on the 1 hour time frame, I might not know that, okay, there's a level here which market is still going to be approaching. I can tell you for a fact that market is still coming to this area, but presently now is here and my target is just around this point. So you can take TP and wait for a pullback again, get another entry, then I'll continue taking it up till we get to our profit target. All right, so I'm going to till we get to our profit. So now I'm just going to analyze this pair afresh now. So I'm going to type AUD USD. So let me move this one aside. So you can see that this is the AUD card in front of me. So what I'm going to be doing is I'm going to go straight to the monthly time frame, because I analyze from the monthly time frame all the way to my entry time frame. So what I use the monthly time frame for is just very simple. I just use the monthly time frame to get direction of the market. Then I come to the weekly to draw my key levels, the daily to identify the immediate trend for the day. Then on the 4 hour or 1 hour time frame, that is where I take my entry, and that is all. So if I want to go lower in time frame, I can go to the 15 minutes time frame, but most of the time I stop at 1 hour time frame. So I'm going to be going straight to this is the monthly time frame in front of me. So I'm going to make the chart very small like this. And one of the key things you want to identify is, if you are not good, if you don't know how to draw level when you see candle like this, maybe candlesticks are confusing you, maybe too much of candle. So that's why you need to come to monthly time frame, because the monthly time frame is going to reduce the candle for, it's going to compress it. So you can see that there's no much of candle here on the monthly time frame. That's why one of you analyzing from the higher time frame. And one thing you can also do is you can also draw your levels very accurately as a beginner. Let's say you're a beginner and you want to draw your level accurately. You want to make your chart a line chart. Once you need to a line chart like this, all the candle will disappear all the weeks, so you can see the levels and everything. So all the candle will disappear, all the wicks will disappear, so you can see those levels and everything very well. So what I'm going to do is I'm going to zoom out a little bit. You can plot the levels on the monthly or the weekly time frame. Most time I do like it plotting it on the monthly time frame because it's more easier for me. So and you plotting it on the monthly time frame and the weekly time frame, it's just the same thing. All right. So I'm going to plot it on the monthly time frame. So I'm going to be using this rectangle bar to draw my key levels, which are the support and resistance, the levels we call support and resistance. All right. So I'm just going to be using this key, but I'm going to make it very tiny as much as I can because I am on the monthly time frame. All right. The more I go in lower in time frame, the bigger it's going to be becoming. So that's why I want to make it small as possible as I can. Now, why did I put this level there? This first one I draw. If you look at it, I just look at this middle here. I make sure I accommodate this one, I accommodate this one, I accommodate this little one in the middle as well. Then I drag it forward, and you can see that price is just respecting it here, and that is the level. So I'm going to take this one, clone it. I'm going to right click on it, then I press on clone. Then I'll bring it down. Okay, let me leave this one up. There's a level here. I'm just going to draw like 3 levels. So I'm not going to draw much of the levels. I'm going to draw just 3 levels. So I have one here. I'm going to click on it again, right click, then press on clone. Then I'm going to bring this one down. So I just want to draw just 3. All right. So this one, I already tell you how to draw the level. Just look left. When you see just look left. Take one point, then join it to another one, then drag it forward. If it's touching like 2, 3 points, then the level is correct. So that's just where I plot the level. So I'm done plotting my level now. I'm done plotting my levels now. So what I'm going to do is I'm going to go to the weekly time frame. All right. So I'm done plotting my level now. What I'll do is I'll still leave it in the line chart, then I'll go to the weekly time frame to to see the levels very well. So you can see this on the weekly time frame. You can see how very neat and very nice levels is. So you can see like if you look at it on the weekly time frame, you see that it's like the candle is becoming more plenty. All right. So now I'm going to adjust this one a little bit. Now I will explain why I'm adjusting it. Okay. The reason I adjust this is because accommodating this guys the middle here and this one. So I have to accommodate that. So that's why I adjust that one. And this one is just perfectly fine. It's okay. All right. So now I'm done plotting the levels on the weekly. So I'm zooming out. So I want to take it back to the candlestick charts. Okay, so you can see this is the candlestick chart. So you can see that on the candlestick chart, if you look at very most like some of the candles are coming out, you can see that some of them is sitting very right, very good on it. So I'm just going to bring this down a little bit. The reason I'm bringing it down that is because of this candle. So no, I don't want to leave some candle below. So you can see that all candles are sitting on this level very well. So you can see it. All candles are sitting on the level very well. This one in the middle are okay. This one up to is okay. All right. This one up to is okay. Yes. So that one too is okay. So what I'm going to do is now I plot out my key levels, and I have seen that okay, I have one. Yes, I just need the because this a lot of pips. This is I'm aligned for the month time frame. So you need to understand that there's a lot of gaps when you are on the higher time frame on the weekly time frame, like the weekly and the monthly. There's a lot of gaps for the market to move. So as I just plot only 3. So as price continue coming here, then I can bring out some more and plot it there. All right. So now on this one, I want to zoom out very well on this weekly time frame. The reason I'm zooming out very well is I want to plot the minus levels I can see. I call them the minor level. Now this one I use with the blue zone is the majors. Now there's also minor level. Now the minor level doesn't mean that it's a minor level price not going to respect or something like that. They are also very strong and very valid. But if you call them minor level is because they are not as strong as the weekly as the major ones. All right. So now I'm going to make the chart more bigger and right. Then I'm going to plot out the minor levels I can see. Now, what I want to do is I make it small a little bit. So I'm looking at these points, looking at this one. I'm also seeing this one here, seeing this one here, seeing this one here. So it means there's a level in between here. So now I'm going to take this rotated triangle, this one. That's what I used to plot the minor level, and I give it a color, yellow in color. All right. So what I'm going to do is I'm going to take it there and watch closely. So you can see then I drag it all the way forward. All right. I just want to make sure, I also make sure that it's very straight. So once I have it like this, then I plot it like this. All right, so I plot one of the minor levels so you can see what I did. As I explained, I checked this point, I checked here, I checked there, then I just connected here, drag it forward so you can see that all others are respecting it. So what I'm going to do is I'm going to move this a little bit forward because I don't need it in the past. All right, so I'm going to make it. So I want to make sure it's in its position, it doesn't change away from its position. Then I'm going to move it forward like this. All right, so I plot that level there on the weekly time frame. So good. Now, when price was, if if you be trading this pair for long, when price was around this point, when it break it, allow it to come back to this place for a retest, and you can see that was why we had some consolidation here, and after that, price boomed off. All right, so I'm going to zoom it out like this. So that's just the weekly level I can see. Then I'm done on the monthly. I've draw the key levels for the monthly, the weekly. Now, what I'm going to be doing is I'm going to be going straight to the daily time frame. And what I want to do on the daily time frame is what I want to look for the flow of the day. Then once I get the flow of the day, then I'm going to decide my entry on 4 hour and 1 hour time frame. All right, so let's go straight to the daily time frame. So you can see this on the daily time frame. You can see that now if you look at, let me zoom it out. Okay, now, if you look at it here, this is where I say it breaks out. Then we have some consolidation came down below everything. Now, if you look at this point, how do you take entry? All right, let me use this point as an example. Like we are in a buy, price was coming from this point, from this low here. Then it gets here. We started seeing something like this. Now, how do I take this entry? What I'm going to do in this scenario is right from this top of the range to this bottom of the range, I'm going to box it. Then I'm going to wait for a breakout of it. That's my entry. Then I put my stop loss inside the box. So, for example, this is what I'm saying. This is the top. I'm going to draw like this. I said I'm going to wait for a break out of it. So you can see this was a clear breakout of it. This engulfing here, this particular one was the clear breakout of it. So this is where I'm going to be taking my entry, and my stop loss is just going to come back to this zone here. Below, actually going to put my stop loss below this guy, this resistance level, which is going to be below somewhere here, and my entry here. So then I'm going to target straight to this zone here. So you can see I've marked that out zone on the weekly, and I come to the daily. I've seen the flows and everything, and you can also use the daily to take your entry. But one thing about daily is your stop loss is going to be kind of a very huge one. So that's why you can see this level. But now let me go to 4 hours time frame and show you guys something. I'm trying to explain the difference of 4 hours and the daily time frame, which for you guys now. So now on the first, this was where it broke it, right? You can see that it broke it here. The more you are coming in down in time frame, one thing you need to understand is if you're on the daily time frame, if you have a daily candlestick closing above a level, you don't need to wait for a retest. Take your entry right from there. But if you are coming to the 1 hour, 4 hours, once it breaks a level, you are going to see some 4 hours pullback or something like that for a retest. Then use that to take your entry. All right, so I'm going to zoom out this place more and show you something. Now, this was the break here, break us out of it. All right. So if I take my entry right from here, any trade you are placing, make sure your stop loss is below the previous swing low. You can see, pull your stop loss below. There is a reason, because price might want to come there to do something like a double bottom. Let me explain that to you, and let me give you a confirmation. Let's say you enter this trade here. You enter this trade here, buy, boom, you put your buy here. Then you now put your stop loss somewhere around this middle, where ideally your stop loss will be below this swing you see here, below the swing here. But you now put your stop loss at the wicks here. Now you can see that you were in profit, then price came back, eats you out, then still wait your direction. That's why you need to put your stop loss in the right place. So let's say as you enter here, then you put your stop loss below this swing. If you look at it very well, you see that even when price came down there, it didn't get to the stop loss, then move in straight in your direction. So that's why you need to keep the rules of trading very, very okay. Now, if I'm to take this entry on this place, this entry here above here, which I got now, my stop loss ideally is to be below this swing here. Yeah, so my stop loss is going to be like this, below that 4 hour swing. And you can see that this is very easy stop loss, that's around 78 pips. So, and I don't want that, so the stop loss is kind of a very huge for me. So in that kind of scenario, when I see a setup like this, that the stop loss is very very big, what I'm going to do is I'm going to let the market move up a little bit, then wait for a first retracement. Once I see the first retracement, I'm going to use that first retracement as my entry. All right. So what I'm trying to explain here is this. Look at this point here. Okay, let me move this aside so you can see what I'm explaining. Look at this point here. When price break above it here, the stop loss is kind of very huge one. So I'm going to wait till I see the first retracement. And you can see price doesn't even move too far. Then I got this retracement. Then what? Price started moving up again. So in this scenario, this is what I'm going to be using as my entry. All right, I'm going to be using that as an entry. And now my stop loss is just to go below the last swing low I can see. So this 4 hours, and the last swing low is this one here. So I'll put my stop loss below that. And you can see instead of me having a stop loss of 78 pips, now I have reduced it to about 30 pips. So you can see this 30.1. So now I've reduced 30 pips, and we both analyze this pair on the higher time frame. We know where the target is, right? We know where we are trading to. So this is not like a further this is not a magic or anything. So we both analyze it on the higher time frame. That's why if you have seen most of my setup, you see that I used to have a very long target. This is because I do analyze on the higher time frame. So you can see analyze from here. My entry was here, stop loss was here, and my tip lead back straight to this zone. And this is giving me a huge reward of 12.67. So you can see it's so you can see the number 12.67. So that is what I'm getting on this trade. 12.67 risk to reward and return. So that means if I'm mixing $100, I'm coming out with, if I'm mixing $100, I'm coming with $1,267. That is a very good trade if you ask me. All right. Now, not just with that, I'm not going to be placing this trade. I'm fold my hand and be looking. All right. Now you have to understand that price moves in waves. All right. Price creates higher highs, higher lows, higher highs, higher lows. So the way price is moving, creating higher highs, higher lows. So you can see when it's retraced here, all I need to do is I want to know where this market retraced to. Is it a valid area where I can place the trade, or it's not a valid area? So what I'm going to do is I'm going to take my Fibonacci and mark out from the immediate swing low I can see, which is this one here, this one down here, then to this last swing high here. So I'm going to use the Fibonacci. I'm going to draw from the low all the way to this high. So you can see it now. Price moved from here all the way to this point. So I use Fibonacci. You can see when price retraced, it retraced inside of 0.618 and 0.5% retracement, which means this 0.5 means 50% retracement. 0.618 means 61% retracement, 61.8. So now price come inside of there, and this zone is where I call the Fibonacci golden zone. If you just come to my channel for the first time, go back and watch my previous video. I used to talk about this Fibonacci retracement to level 50 and 6.18 is one of the best retracement I love. All right. So when price retraces to this level, and I have this first candle that is coming, closing. Now let me explain something. Let me zoom out so I can explain this to you guys. So you can see when price retraces to that level, I'm not going to be buying inside the level. What I'm going to do is I want to see the first green candle, like an engulfing candle, and you can see we have this here, this particular candle. Let me zoom out so you can see this particular candle is an engulfing candle. So I'm going to be using this engulfing candle as another entry, right? So this is what I'm saying. I'm going to use this as another entry. Now my stop loss will go below the last swing low, which I can see, which is going to be in line with the Fibonacci 61.8% retracement. Now, what I just did here is this other trade I'm on before, I'm going to move the stop loss to also be in this zone here. Now, this my new trade, the stop loss is here. This other one, the stop loss is here. It means this trade, I have locked in much profit. I've locked in profit very well, because if you look at this trade from here, let me show you. If you look at this trade from here to this point, I put the stop loss. This is like a risk reward of 1 to 2. All right. Now, out of the 1 to 2 I've locked in on this one, I have used one of it to place another trade, which means even if price has to retrace against me, I'll still be up with +1. All right. And my target still what? My target still remain all the way to that high. That very, very high. All right. We still go all the way to the high. To that same zone. All right. So that's where my target is still going to be. It's still going to be the same target. So you can see we have the same targets. Now, if you look at our first trade, we are making 12.67% on return on investment, and this one we are going to be making 7.29. So if I had 7 with 12, that will give me 19. So the point two and the point six, they give me point eight, all right? And seven outside of it and the nine outside of it will give me 1.2 or so. So 0.2. So if I add that to my 12 plus 7, that is 19. So I'm going to be having a sort of 20.02. Yes, I'm going to 20.01, I think so. Yeah, I'm going to be acting. I'm going to be up with a huge word of 20.0. This is so that's 20.05 thereabouts. Yeah, so 20.06. Yes, so I'm going to be up in the percent of 20.06. I'm just going to give it a round number. That's 20% on return on investment just on one single trade because I want to analyze on the higher time frame. This is one of the key points you using the higher time frame to analyze. It's going to give you the flow of the direction of the market and everything. And now that's not the end. I can tell you that I'm not even making 20.0 on this trade. Now I'm going to prove that to you. I'm not going to make it 20.0 on this trade. So now this setup, if you watch this video on time, I'm giving you a new setup to trade for this week. This is another trade call. I'm just giving you directly, even just explaining how to trade the using the top down analysis. All right. So I'm going to pick the trend tools. I'm going to mark out what I'm seeing now. So you can use that as entry confirmation and everything. So from this point here, I'm going to put out tools here and drag it all the way down. So I'm just going to adjust it because TradingView is kind of misbehaving on the phone. So you can see it's good. So now I'm going to put this one very up here. So you can see what I'm explaining. So you can see I use this trend line, touch this one, then drag it down. Let me zoom out so you can see. Okay, let me give it a little bit of adjustment. So now look at it. What all I need to do is connect 2 points. Once 2 point is connected, I drag it down. Then price will come and do the top, and every one of it itself. So very simple. What I did was this one was together, so I use this one. If I see this looking like a double top, so I use this one. Then I connected with this one. Then I drag it down. So you can see price come here, respected the kind of pullback, but it's not strong. The sellers are not strong enough to push the market down. They came back there again. They tried again. They tried to push it down. They are not as strong. They are not as much. And buyer came again. When buyer came again, what they did this time around was they came and broke it. So now, if you've seen this setup on time, if you see this, if you watch this video on time, just take this trade without thinking twice. All right, take the trade without thinking twice. Sorry. Yeah, I don't want to mess up with that. So now I'm going to delete this one as well. This one, right? I'll delete. Now I'm left with this counter trend. Now I call this a what? This is a daily trend being taken out with a 4-hour candle. So today is Monday, September 29, 2025. Market is about to close. Is around 7 something. So what you want to do is you can wait till this is AUD card. So card open the Canadian dollar open in the morning during the New York session. Australian dollar open. The Canadian dollar open during the New York section. Then Australian dollar open during the Australian section. That's Tokyo section. So the Tokyo sections open 11 p.m. in the night. So once this section open, just wait like 1 hour, then get in this trade, which means by 12 you are meant to be on this trade. That's a new day. That's on Tuesday, 30th of September, you are meant to be on this trade. All right. So Tuesday, 30th of September, you're meant to be on this trade. And this is how your entry. Let me just give you the entry, the stop loss, and everything, so you don't need to worry yourself. So this is our entry here. Sorry, I picked the wrong tool, so let me just reverse this. So no need of going and I'm just going to reverse it. All right. So I put my entry here. Stop loss go below the last swing. So you can see this is the swing. That's why you see my stop loss around this region. So stop loss go below there. Then my level target is going to go straight to. All right. So pardon me, guys. My level target is going straight to this zone back here. So I'm having a risk reward of 1 to 4.5. Yes, I'm having a risk reward of 4.5. So you can see this is 1 to 4.56. So you see risk/reward ratio. That's 4.57. So that's a risk reward of 1 to 4.5. So I'm risking one, I'm going for 4.57. So that's 4.5 approximately. Let's say 4.6. So I'm just going to say 4.5 approximately. Right. So on this trade, I'm having for my new entry I'm taking up, I'm having a risk reward of 1 to 4.5 because the counter trend line is being broken out. Now, when I wanted to start this chart to use it to explain to you guys, you are actually going to see something like this, a chart open. Now, I'm going to take you to that chart. Look at the analysis we just do now. Let me take you to that chart and tell me the difference. All right. So it's also AUD card, but on a different broker. So this was the one I had before the new one. So you can see this. Now, can you see this? This. You see, I'm laughing. So can you see this? This is just the trade I took before, and I'm presenting on this trade. So you can see I took this trade around there. My stop loss was just below that swing. So you can see I put my stop loss below the last swing. I can see. I'm presenting on this trade. I'm with about almost yes up to 2% return on investment, like 1 to 2. I'm up with 1 to 2 already. So you can see I connected this one, connected this one, they drag it down. Same thing analyzed in the new hand, and the counter trend line is broken there, which means, and here the counter trend line is just um just around the trend line. But I have to tell you that it means on that one is practically the trend line they did touch this one very well. That was why we have it like this. But it's the same thing. So right now I said when market open 12 o'clock Tuesday, September 30, 2025, take it, and that's exactly what I'm doing on this trade here. I've already shared this same setup I'm here now. What I just tell you now, I shared it in my trading community, that's my free signal community. So the link is going to be in the description. That's the WhatsApp community. So join the WhatsApp community, join the Telegram community. The Telegram community is not functioning back for now, but just join, be on the waiting list. So once it starts functioning, you get the update. So the WhatsApp community is so much as active. So I dropped this one and I said, waiting for this counter trend line to add more positions. That's what I said. I'm going to be sharing the screenshot around the side so you can see that the screenshot there from the WhatsApp community, so you can see that screenshot there. So just read through it. I'm reaching. So you can see I'm taking it to this blue zone. That's the same blue zone we had over there. Now the entry I asked you guys to take is going to be from here. Your stop loss will come below here, which is giving a risk reward of 1 to 4.57. All right. But for this one that I've taken the entry earlier, all right, this one TP, this one risk reward is going to be. So now let's check the math. Let's do the math together. This one risk reward is going to be what? A risk reward of 15. One ratio of 15. Mixing $100 on this trade, I'm making $1,500. Mixing $1 on this trade, I'm making $15. So just imagine you have a very small account, just a very small account. Let's say you are just a beginner. You don't even want to risk. You want to test this setup I just gave now. You want to test this strategy. Put like $10 on this trade, then risk it. You're going for 1 to 15. Just $10. Test this strategy out. Test this signal I'm giving you out. Test how accurate my signal I've always been. All right. So test it out. Let's see how much you're going to be making. All right. And mind you, this is going to come like this. It's going to break this previous. When it comes to that again, if I'm going again, I'll add more positions. So it means definitely on this trade. If I enter this trade with $1, with $10, I mean $10, I'm not going to be making $15. I'm not going to be making more than $50. I'm going to be making more than that, which means I'm going to be making nothing less than. Because if I had a new trade, if it's breaking and had a new trade, I'm still going to have a minimum risk reward of 1 to 5. So which means my $150 plus $50, I'm still going to be making nothing less than $200 on this trade. So that is why I recorded this video to show you how powerful the top-down analysis can be and how it can help you. And one of the advantages you also get from this top-down analysis is it gives you the time for flexibility. You just place your trade, go out and do other things, and the trade is just going to do its thing, creating higher highs and higher lows, and you get your fee. All you need to do is just come to your chart at the daily candle close, like every day when the market close, just come and check. Okay, where the price moving to? Has it given me another entry? Has it given me room to move my stop loss above my entry for my trade to become risk free? That is all you just need to be doing. Once you are doing that, just leave the market, let it continue doing this thing, making you money till it gets TP. So if you find this video helpful, don't smash the subscribe button, drop a like and click on the notification bell so you don't stay at the top when I drop other content like this. And I see you in my other subset video.